Good evening and welcome to Money Matters. I'm David Ebner from Merrill Lynch, and with me this evening is Charlie Shields from Wells Fargo Advisor. Hey Charlie, good seeing you again.
David.
Well, Charlie, we have an exciting show. We're going to learn a lot about crowdfunding and other ways to raise capital for small business owners and maybe medium-sized business owners. But lots happened in the market since we last talked. Is there any good places to invest right now?
Well, you know, that's always a great question, and one way to answer it is to look back, let's say over the last year or two or three, and say what's gone down and what's gone up. And over the last 2 or 3 years, without trying to time the show for our viewers and listeners, this is taped, and so any opinions we express, you should check with your own financial advisor. Also, we're not attorneys and we're not accountants, so don't rely on us for any information in those theaters. But when you look back over the last 2 or 3 years, the United States markets have gone up a lot. And for example, emerging markets have gone down a lot.
Interesting.
And Europe is somewhere in between. So if I just take that perspective, I would say this probably is not a bad time to be starting to nibble on some emerging markets. Everybody has decided, based on the rearview mirror, that the United States is the only place to invest.
Right.
So maybe emerging markets is a place to look at, maybe Europe. The developed markets overseas are doing better so far than emerging markets. But that's one way to try to analyze where should you invest.
Yeah, it's always sound and prudent advice to tell people to buy low, right? And
Yeah.
so that's very prudent. What about the housing market? Rates are going up. Actually, last time you and I talked, we talked about bond prices coming down and rates are going to come up, and it's just a matter of if or when, not if. And well, here we are. Rates are going up. Is that hurting the housing market?
Well, it is in the short run. I get a chuckle out of hearing people say, well, I've missed it because mortgages are at 4 5/8 right now. And you think back 7, 8, 9 years ago, people would say, gosh, I wish I'd been in the situation that my parents were in the 50s where they could get a 5% mortgage.
Right.
You know, so then we have a couple of years when the economy's in real trouble and people were able to get 3 5/8, or if they caught the very bottom, maybe a 3 3/8 30-year mortgage.
Right.
And now it's at 4 5/8, which historically is a wonderful low rate.
Absolutely.
So I think as some of these part-time workers start to get a full-time job, as both spouses get a job, and they finally get around to saying, we finally got the wherewithal to buy a house, I think they'll take another look at a 4 5/8 rate and say, maybe it's not too late. Let's go ahead and get a 4 5/8 mortgage, and let's get the tax break on it if it still exists and all that sort of thing. We have to watch out for. We're not lawyers, we're not tax advisors, but you have to be aware of those type of things when you make the investment, right?
Low-hanging fruit, you're saying it's going to disappear. It's very possible. Absolutely. Yeah, with the interest rates going up, absolutely. I chuckle too, you know, at cocktail parties and stuff when people say, oh, the rates are climbing. Yeah, yes, they're going up from their bottoms, but they're still historically very low. And, you know, if you can get something, you know, especially when you amortize it over 30 years, it's almost a rounding error for most people. So, again, the longer the perspective, the better the execution, if you will. So.
Sure. And then the other thing is, if you really wanted to have a 3 5/8 or 3 3/4 rate, get a 15-year mortgage. The payments are higher, but over the life of the loan, you're paying a lot less. And if it's affordable, if you can handle the payments, you can still get a very low interest rate.
Right. Obviously, many options that people need to look into. Absolutely. But I do like the idea of going fixed versus variable, because
I do too.
Rates are not going down, I don't believe, in the near term.
Well, that brings us into a discussion about who's the next Fed chairman and all that sort of thing. You've got all this uncertainty that if you get a dove, by a dove I mean a person who will leave interest rates low to try to make politics look good for the incumbents and all that sort of thing, the danger there is inflation can come roaring back. And you don't know whether that's going to happen. And when you don't know, as you say, get a fixed rate that's reasonably low based on history, and then you know what you've got.
Right.
And you can get this teaser type of thing for a couple of years, but then when you get ready to roll it over, who knows whether it might be a 5.5% or 6% mortgage for all we know.
Absolutely. And, you know, it's funny you made that comment. I thought the Fed was not part of the political system.
Well, the one part of it that is political is the fact that the President of the United States gets to select the next chairman.
Excellent point. It does. There's that. So you talked about the markets going up in the U.S. Ps are probably around 14 right now. Is that too high, too low?
Well, there's a rule of thumb that works until it doesn't work, but it's pretty good if you look over the long haul. Of 20 minus the inflation rate is what the, quote, proper price-to-earnings ratio is. And if you believe that inflation is 2 or 3% right now, maybe our economy could handle a 17 price-to-earnings ratio. And if you have a climb from 14 times earnings to 17 times earnings, if that turns out to be correct,
sure,
that's another 20% market gain.
Right.
Now, I've seen times that price-to-earnings in 1974, they were at 8 times earnings because we had the Vietnam War,
sure,
we had impeachment,
yep,
we had all kinds of problems.
inflation, right,
the nation was infighting
civil
about
unrest,
the war,
yep,
and it was just horrible. And PEs were at 8. So I can't tell you for sure that 14 is low, but it's probably in the middle of the range we've been in over the long haul. And if things stay if inflation stays under control, we could see a nice improvement in the price-to-earnings ratio up to 17 times earnings.
Yeah, I would piggyback on that by saying that investors should also look at what companies are doing. Companies are buying back their stock. They're increasing their dividends. So they have the cash, and obviously we haven't seen the acquisitions happen, but they're probably going to happen right around the corner. But right now they're buying back stock, and that's going to increase your earnings by less outstanding shares. It's that simple, right?
Sure, and you have a lot of people working part-time because of uncertainty about the Affordable Care Act and all this sort of thing. And once that haze clears, perhaps they'll start hiring full-time workers and full-time workers because God knows they need more help. People their fingers are being worked to the bone, the people that are with corporations now. And you could see a surge in demand for products as new workers come online that are getting paid full-time for full-time
sure,
jobs. So a lot of things could happen in the future that would take that price-to-earnings ratio from 14 to 17, create more consumers, higher taxes, less of a need to increase taxes because taxes would go up just from the fact that there's more workers paying the taxes. So there is an optimistic scenario that we can look for out there and hope for, but we have to be paying attention over the next couple of years as things unfold.
Absolutely. A good idea. So speaking of the future, where's gold going, or the dollar?
Well, I think gold and the dollar and the 30-year bond are the three vigilantes. And so we were talking earlier about whether or not someone is going to be becoming the next chairman of the Fed who's going to allow inflation to come back. Well, the clues that I'm going to get from whether inflation is coming back is gold soaring up through 1900 and climbing higher, or is it staying where it is or dropping? Is the 30-year bond going to go up through 5%, heading to 6 or 7? God forbid, back where it was in the Carter era in 1979, where it was 16%. Will the dollar plummet because confidence is being lost in the United States? So those three vigilantes are going to answer the question. Right now, my guess is that gold will not be making new highs, but if the wrong people get in and are allowing inflation to come back, then all bets are off on that statement.
Yeah. So be vigilant is what you're saying, which is probably prudent advice.
And watch those indicators.
Absolutely, absolutely. Well, that's great. Always good information. And we do have a question of the week, if you can tackle that before we get to our guests. And this comes from Thomas Long of Exton, PA. He says, what's the difference between a market order trade and a specific price and time trade?
Well, it's very quick and easy to tell you the difference, but then we need to talk to our viewers and listeners a little bit about that. The exact price that a stock is trading at, if you say, I want to buy at the market, then you'll put in your order, and whatever it's trading at that time is the price you'll get. If you think that a stock is due to come back down a little bit and you want to own it but not at that price, you can put a limit order in and say, if that stock drops down to a certain price below where it is now, I want to buy it at that time. You can do that during the day, which is a day order, or you can do it for 180 days with my firm, which is a good till canceled order. The thing I want to warn viewers and listeners about, though, is if you put in a market order and you put it in overnight, and some good news comes out about a stock, that stock could jump 10 points at the opening, and you own it 10 points higher than when you were having the conversation. So you have to be careful. And also there are limit orders that you can put in for stops. If you own a stock and you want to protect yourself, you put a stop limit order in, or you put a stop. And there's a difference there. The stop limit means if it hits that price, you want to get out at that price if you can. But if the stop is an automatic market order as soon as it hits your stop, if it's dropping fast, you might get out at a lower price.
Right.
So there's a lot to understand that's deeply embedded behind the question that was asked.
No, it's a great answer, and I think it's just as Charlie said earlier. It's important to talk to your financial advisor before making any trades. That's for sure. But if you have a question for us, please send it in to Money Matters at 205 East Leving Mill Road, Ballackinwood, PA 19004. or moneymatterstv@gmail.com. Our guest today is David Drake, and he's from the Soho Loft in New York City. And welcome to the show, David.
Well, thank you, David. Pleasure
Good
being
to see
here,
you,
Charles.
David. Thanks for being here.
So tell us a little bit about your background, a little bit about the Soho Loft.
Well, I've been practicing my background for a while now. So the Soho Loft started about 2 years ago.
Okay.
It really started 10 years ago when I actually had a loft in Soho.
There you go.
A 7-bedroom bachelor living in a loft in Manhattan. It was amazing.
That is amazing.
Little did I know then.
Yeah.
But we recreated the Soho Loft in 2011 for our private equity advisory group to bring on family offices and institutional investors together. It was the same time as the congressional elections were going on in D.C. So we were getting fresh content from sub-congressional witnesses. And suddenly we're doing these events all over the U.S. several times a month. And I become an expert on private equity, venture capital, angel networks, crowdfunding, we'll talk about today. But a lot of this is around small, medium-sized business owners and how can they get cash now when banks and venture capital firm has been decimated after the great financial crisis. So today, the Soho Loft that we're running is focused on writing. We write for about 40 magazines. I write for Forbes and Thomson Reuters on a regular basis.
Okay.
Thomson Reuters asked me to do institutional events with them in the past, 3 conferences that we did. And we also have conferences that we produce, sponsor, and manage on a regular basis, several of them a month. So for small business owners, maybe we have 50 events a year nationwide focused on angel investors and venture capitalists. And they just want to meet small owners and startups. So that's one venue that has become the age of angels today.
Okay.
Because before the crisis, we had 2,700 VCs.
Right.
Right after October 2008,
disappeared.
there were only 400 active.
Yeah.
Banks stopped lending right away.
Sure.
So they've become an age of angels, and it's really taking off. I mean, I covered the Angel Capital Association's largest event in San Francisco 4 months ago, the largest ever, 650 people from all over the world. And new countries that hasn't really evolved much on the site are increasing, and it's hitting $22 billion this year. Last year was $22 billion from angels, and venture capitalists were all about the same size, $25 billion. And there's only 268,000 angels last year. So the new law in the Jobs Act, the most powerful one, that we're going to talk about as well before we get to crowdfunding, is you're allowed to advertise for investors. It hasn't been allowed since 1933 SEC Act.
Right.
After 80 years, you're allowed now to advertise for investors. But you have to be SEC compliant, so obviously you should talk to a lawyer, you should talk to a platform who understands this. But this is tremendous. If I want to give you some numbers, in 2011, there were about $968 billion that SEC disclosed in public offerings in the U.S. Reg D 506, very complicated formula. It's the most common way to raise money privately for funds and companies. That one was $895 billion, almost the same size.
Right.
So we're talking about a potential $1.5 trillion market being affected where you can advertise. And that is exciting.
Yeah, obviously it's exciting when you can go out and get the average investor, if you will, investing in angel investing. But you spent some time in Milan and Istanbul and Athens. What did you learn about capital formation there?
Well, they're all...
Because they're emerging
yes,
areas,
yeah.
right?
They're emerging markets.
Yep.
Europe is very active. I
Yep.
was invited by the U.S. Commerce Department to be representative to Brussels and Rome last summer to talk about SME policy, small, medium-sized enterprise policy, and how things are working here as well as working over there, and which programs will be changed. And they're a little behind us, and they're always going to be behind us. I believe so because they have cultural and language issues.
Okay.
Angels, for instance, in Europe, they have a hard time investing in Germany if they're from France. The exception would be if they were working in a conglomerate.
It's the borders, right? The borders are the problem.
So they need to understand the accounting and the culture, and that inherent challenge is always going to be there. So their angel network investment is around $6 billion. The U.S. is 22 now.
So they're trying to implement our laws so they can have a better
Some
formation?
countries are, but that's taking even longer. And
Okay.
it's not. I did cover the Italian law for crowdfunding.
Okay.
So I broke the news in English. I waited for an Italian financial magazine to write it. I translated it. I had the lawyers. I had a copy of it from the SEC equivalent, and I broke the news globally on that. They're all looking to the U.S., and the U.K. is really the strongest market.
Okay.
For early stage companies, it's because U.K. does something unique. You can deduct your investment in an SEIS company that's qualified 50% against your salary.
Really?
50% against your personal salary. And that's why small businesses there are flourishing, because they're like, wait a minute, I can deduct 50%. So, we don't have that in the U.S. per se, but we have other things.
Absolutely not.
Right. I understand that, you guys are going to be giving advice to small, medium-sized businesses.
Mm-hmm. Right.
And these new areas of crowdfunding that I haven't talked about yet, and the new law where they can advertise, they're going to come and trust you both and say, hey, we heard about this. What can we do? And you're going to be in a very powerful position to do what the banks have not done. Right. The banks have not been able to step in. They've been, dealing with the fact that they couldn't resolve. So the new players on the block, the angels, the crowdfunding technology is coming in, and it's not leaving.
Well, David, let's take this from the overview above to specifics. If we have an entrepreneurial listener or viewer who's thinking about trying to do something, they have this great idea, talk us through an optimistic scenario of what could happen, how you could help them, and how quickly they could make things happen. Just give us an idea of what you could do for someone.
Well, we write a lot to educate investors and entrepreneurs, to show them what is possible and what the challenges are. I think going to an angel network to pitch is the best thing for us investors in the world. It brings their expectations down, because they're going to see questions asked to other entrepreneurs, and they'll realize what they're missing in their own plan. Right. We often, as investors like myself, entrepreneurs might say, well, it's worth $10 million. It's on my napkin. I'm like, really?
Right.
But when they go to these events, they start seeing other entrepreneurs. They'll meet face-to-face with recognizable venture capitalists and angels. And we show them on the site who they are, so they can research the firms before they go to an event. So it's not a guessing game.
Okay.
So that's one way. But if you're going to go even before then, they need to have a 2-page executive summary.
Yeah.
I worked with Adia in the Middle East, in Abu Dhabi, the world's largest sovereign wealth fund. And they tell me, David, this is how we want to look at a 2-page executive summary. Right. We want it to look like this, because we get 100 of them a month, just our little division.
Of course.
Or a week even.
And it's been my experience that they want to see an awareness of cash burn, that you're showing some milestones along the way and showing that you want to prove this can work before the investor puts more money in, an awareness of that, and not just keep spending your money until my idea works, right?
Of course, yes, I agree with you, Charles. Yeah. And I have a friend in New York, quite a few of them. One is a super angel, somebody who invests a lot. He likes to invest $100,000 per startup. He invested in 20 of them. The last 15 years, that's all he does. Okay. He goes to office to office. That's his life. So, the nice with angels is they all have their own criteria.
Sure.
Some of them will have that, some won't. Venture capitalists, they're more there for the business.
Yeah.
They'll do more of what you're saying. The angels will do it for more of passionate reasons.
Okay.
They might like the youth of the entrepreneurs. They like the idea. They want to learn. Some people just do it because they don't know anything. Some people just do it because their friend invested.
Right.
So it's a little more of chaos, but it's organized under an angel association in the U.S. as well abroad. And back to your question, Istanbul, when I was speaking there, they've seen almost 100% growth in entrepreneurial investments the last couple of years. And I spoke for the European Business Angel Network.
Well, as Charlie was saying earlier, obviously the emerging markets, as they catch on to capitalism and how it works and what the benefits of capitalism, it is going to explode, right? I think you were talking earlier about China. If you have 1 million people in your city, it doesn't even show up on the radar, right?
Right.
So that's powerful, right? You back that up with capitalism and all the things you're talking about. But let's talk about crowdfunding. You know, I've seen it, I've read about it, especially in the Hollywood. It's gotten a lot of press here.
Yes.
Is that the future? Is it just a flash in the pan?
The technology is here. The word's being abused. My definition, and I write so much, I deconstruct what's happening with private equity funds and crowdfunding funds in different countries. And I look at the regulatory landscape. So to me, crowdfunding is anytime you make a payment online towards one cause, product, service, or product, those things,
Okay.
experience,
Yeah.
through the computer. I consider that crowdfunding, with the caveat that it doesn't matter how much money or little money you have making the payments.
Okay.
That's where it gets gray here. Everybody's using crowdfunding.
Right.
You know, hedge funds are using crowdfunding.
Right.
I have a column in HedgeCo, a hedge fund line. I write for them too. But everybody's starting to use it, and you really need to understand it, how it works everywhere. And many of them are broker-dealers.
Yeah.
They're just not crowdfunding. Because the idea is, look, I have accredited investors in a little box. It's really crowdfunding. I'm emailing them. They're accredited. They invest. It's okay. Mm-hmm. But in my scope of crowdfunding, it's for anybody to put money in. And that's the issue, is the challenge being with the SEC, you know, because we have such a legacy issue from the 33, 34, and 40 Act,
Right.
that we now have to deal with something that didn't exist then. The internet, TV didn't exist.
Right.
And it's all brand new.
Right.
So it is.
So how are they
interesting.
going to regulate that? Because that's what I was going to piggyback on.
We're
how do
waiting.
you regulate it?
We're still waiting. Italy passed it, but it's not practical. UK has been running it, but it's not a new law yet. They're using exemptions.
Right.
Sweden, Norway, Sweden, Denmark, Holland, you know, even Hong Kong and Singapore are using exemptions. Italy passed the first law, but it's not practical yet.
Right.
Just because they haven't doesn't mean that you can just go and do it. US was supposed to have it passed January 1st. It's going to be delayed quite a while. And when it passes, it still had challenges because we don't know what the rule's going to be. But we've been working with some of the association with the SEC on a regular or weekly basis, talking to them, you know, evolving, you know, the challenges that are there.
Right.
And,
well,
I think it'll be powerful on the equity side.
Right.
But if we talk about rewards is you don't get the stock.
Right.
And, you know,
That's
Pebble
just it.
Watches has the world record. $11 million, 10.2.
What's Pebble Watches?
It's a watch connected to your cell phone.
Okay.
So when it rings, or your iPad, you can look at your watch to see who's calling.
Okay.
And they walked into my event May 9th in 2012 in Palo Alto, and they're saying, we're winding down our campaign. We couldn't raise $100,000 with angels. But online, in less than 30 days, we'd raised $10.2 million.
Wow.
And what was interesting was that a year later, not less than a year, 9 months later, or 10 months later, Charles River Ventures in Silicon Valley gave them another investment of $15 million. Wow. And it took them 9 months to deliver their watch, even though they promised 6.
Right.
Okay, so the crowdfunding, I guess the difficulty is, has someone really been taken advantage of
Right.
if they put a small amount of money in and a business fails? And the idea with an angel investor, they're supposed to be sophisticated and they have more money, and so therefore you can say you have to be qualified in some certain way to invest as an angel investor. Talk a little bit about the angel investors, and when they do put their money in, are these extremely wealthy people? Is this focused in New York because that's where the empire of money is in the United States, or is it growing rapidly all over the country or all over the world?
Well, interestingly enough, you know, Silicon Valley is still almost the center of venture capital. Mm-hmm. And when it comes to angel networks, you have them nationwide. However, in New York, the last year, we've seen an explosion of activity for startups and angel investors and early stage angels that we haven't seen before. Mm-hmm. I mean, offices that are being shared are popping up left and right, and they're sold out, all rented out. And, you know, a lot of organizations in Europe have moved to the U.S. because there is a history here versus the rest of the world that, hey, we're used to using credit cards and having debt and spending more. We're used to, you know, donating more money. And, you know, a lot of crowdfunders that I've advised and worked with, 3-4 of them have actually moved their offices to New York and Silicon Valley the last 2 years, because it just takes so much energy to explain something to somebody who doesn't want to be explained to in their home country.
Sounds like the sure winner is going to be the real estate owner leasing these places out.
The Soho Loft, right? That's what it sounds like.
Yeah, the real loft. There you go.
The real loft.
That's my secret sauce. I'm going to have a real loft again.
He owns a city block. That's his secret sauce. Well, obviously you talked about crowdfunding. You study alternative
Financing.
and financing. Why don't you tell us a little bit about that? And is it growing? Is it changing? What's the hurdles in it?
Well, because we saw the VCs decimate and we saw banks stopping to lend, what's everybody going to do? It's been rather chaotic.
Yeah,
so alternative
absolutely.
financing has been a topic of everybody's mind, but I haven't really seen anybody, display it properly or in an efficient way. But I do think, the conferences are good. Conferences for entrepreneurs, physical, like we're doing face-to-face, explaining, how do you do this? What are the steps? And also letting the entrepreneurs get a real-life VC angel sitting there in the public, criticizing them on the spot.
Right.
It's very efficient. And I think more and more events become important right now. But we're seeing a digital era where things have been educated online. And the crowdfunding phenomena is being implemented by hedge funds, by private equity funds. I wrote the top stories about that,
right,
as well as for angel networks. And in Europe, we're seeing an interesting thing. I just wrote an article how angels take the lead in crowdfunding platforms.
Interesting.
And they're saying, we're not going to do this deal. The angel will negotiate the terms. And after that, you will follow in line after their terms.
Gotcha.
And that is something I've been talking about for 2 years. I think it's angels who take the lead in the U.S. too and elsewhere. That gives a comfort factor. And you're right. The problem here is this is private businesses. It's not public. 95% of these companies are going to fail.
Absolutely.
And you have a couple of them fail, and people start screaming fraud, and it's not.
It's just a failure.
Failure.
Yeah, right.
So it's an it's a difficult balance that we have discussing between the groups talking with the SEC, the people in the industry, and not only in crowdfunding. Like it is non-accredited investment potential in this new law. When it becomes legal, 90% of these deals are going to fail. How do you deal with that?
Yeah.
And the platforms are not set up to deal with that because it's not legal yet.
Right.
But when it becomes legal, now on the rewards part, they have, right now maybe 50% of campaigns get their money.
Sure.
That's really high. And that's why some of the, Kickstarter is the biggest in the world.
Right.
They did 274 million last year.
But they've had success. That's why
Yeah.
That's why it's 50%.
Yeah, and there's 1,000 sites today doing crowdfunding, actually more than that. So it's a lot of noise, and it's going to be exemplified by these new laws.
I noticed you were involved with this Champions of Change event at the White House. That sounds pretty interesting. Can you tell me a little bit about what happened this summer with this event?
Yes, the White House invited me to go to the Champions of Change event. They had identified a couple startups that they wanted to acknowledge as champions. Unfortunately, I was with my father in Down Under, Australia and New Zealand, speaking at 6 conferences.
Oh,
So they
okay.
gave me a rain check, and I did follow up on that rain check a couple of times. So I've been in constant communication with the White House since. So it's been an honor to be able to be invited to that event.
Okay,
That's the
great.
thing. So with all these alternative investment or alternative investing, if you will, do you see small banks going out of business here?
Oh, no, not at all. You actually see right now crowdfunding happening, but with debt, microfinancing.
Okay.
Lending Club, I don't know if you heard of it, but, they have John Mack, from the former CEO of Morgan Stanley, on the board of directors.
Okay.
They're going to hit $2 billion in peer-to-peer loans, up to $35,000 that you can loan online.
That's fantastic.
Against consumer loans. So small banks are using that debt side of things to extend loans, and that's already active. Small banks will always be core of the communities.
Well, that's good to know. And unfortunately, Dave, we've run out of time. And as I told you, we go fast. But it was great information. Our next week's guest is Richard Sitchell. He's the CIO of Philadelphia Trust Company, and he'll tell us what's new and exciting in the trust. And until next time, your money matters.